Imagine, for just a second, that you are preparing for the biggest initial public offering in the history of global finance.
Oh, yeah. The pressure there.
Right. You're targeting a valuation of $1.75 trillion. And, I mean, just to put that into perspective, that is actually larger than the entire gross domestic product of most developed nations.
It's a completely unfathomable number.
It really is. The eyes of every institutional investor, every hedge fund, every financial regulator, they are all scrutinizing your every single move. And now imagine taking $60 billion of your hard-earned capital right before that IPO and just dropping it on something entirely outside of your core business.
Which is quite a choice.
Yeah. But that is exactly the situation unfolding at SpaceX right now in May 2026.
It is a staggering amount of capital to deploy. I mean, if you look at the immediate reactions from traditional aerospace analysts today, they are completely bewildered.
Oh, totally.
You don't typically see a company that, bends metal and builds orbital rockets suddenly pivot to buying enterprise software at a massive premium.
Which is exactly why we are taking a deep dive into this today. We have gathered this massive stack of sources. We've got recent financial filings, tech industry analysis, crypto market postmortems, corporate blog posts, and even some very revealing SpaceX engineering job listings.
Yeah, those job listings are a goldmine, honestly.
They really are. And our mission today is to decode SpaceX's unprecedented move to acquire an AI coding startup called Cursor. So, okay, let's unpack this, because whether you are an institutional investor, a software developer, or honestly just someone trying to survive the AI revolution, this deal represents a massive shift in how the future infrastructure of our world is going to be built.
Absolutely. And to understand why an aerospace behemoth is spending $60 billion on a software tool, we really first have to understand the underlying asset.
Right. What are they actually buying?
Exactly. We have to look at what Cursor actually is, because its growth trajectory is, well, it's unlike almost anything recorded in the modern tech industry.
Yeah, trajectory is putting it mildly, I think. The data we have shows this is the fastest scaling B2B software company on record. Full stop.
It's wild.
At its core, Cursor is an AI code editor. Technically speaking, it's a modified version, or a fork, as developers call it, of Microsoft's Visual Studio Code. And the company behind it, AnySphere, was founded by 4 individuals who were all, get this, born after the year 2000.
Which makes their enterprise penetration metrics even more astonishing.
Right.
I mean, they're selling to these massive legacy corporations, yet they're barely out of college.
Wait, let's talk about those metrics for a second, because the filings show they hit $2 billion in annual recurring revenue, or ARR, in roughly 3 years.
3 years.
3 years. Enterprise giants like Slack, Zoom, or Snowflake usually take a decade to see that kind of massive enterprise adoption. What is driving IT departments to adopt this so quickly? Because they currently have over 1 million paying customers, and the product is used by nearly 70% of the Fortune 1000.
Well, it comes down to a fundamental paradigm shift in how software is written. So for the last couple of years, developers were doing what was colloquially called vibe coding.
Vibe coding. Okay, let me guess. That's when you have an AI autocomplete a line of code here or there, and you just kind of guide it along and hope it works.
Essentially, yes. It was highly reactive.
Right.
But Cursor is leading the industry shift to agentic coding through their proprietary composer model. And the mechanism here is crucial.
Okay.
Instead of just guessing the next word or line of code, an agentic model writes the code, runs it in a secure sandbox environment, reads the error message when it inevitably breaks, and then rewrites its own code based on that error.
Oh, wow. So it's self-correcting.
Exactly. It loops this process until it works. It is actively planning, executing, and testing entire code bases autonomously.
I love that distinction. So vibe coding is basically like having a sous chef who only chops a carrot when you point directly at the cutting board. But agentic coding is like hiring a head chef. You just hand them a menu, and they check the pantry, prep the ingredients, and cook the entire meal while you step entirely out of the kitchen.
That is a perfect way to visualize it. It's looking across multiple files, finding complex logic errors, and self-correcting without any human intervention.
It's incredible.
In one recent benchmark from our tech sources, Cursor actually built an entire complex data table component in just 2 rounds of human prompting.
Wow, 2 rounds.
Yeah. Compare that to GitHub Copilot, which took 5 rounds and still required manual debugging from a human.
Yikes.
That efficiency leap is why a $50 billion private valuation, which, remember, was a number being discussed right before the SpaceX deal, actually makes mathematical sense to investors. It means Cursor is trading at about 25 times its current revenue.
But I have to push back a little bit on the long-term viability here. If you're listening to this and wondering about the competitive landscape, aren't they ultimately just a feature? I mean, couldn't Microsoft or Google just bundle this exact agentic capability into their existing products for free?
That is the big question.
Right. It feels a bit like building a remarkably better cup holder for a car. It might be the absolute best cup holder in the world, but eventually, the car manufacturers just build it into the dashboard themselves.
You're touching on the exact risk every venture capitalist loses sleep over. It is the classic platform versus feature debate. Microsoft obviously has GitHub Copilot integrated deeply into its ecosystem.
Right.
Google and Amazon have their own proprietary tools too. But the counter-argument, and the reason developers are actively forcing their corporate IT departments to pay for Cursor, regardless of what Microsoft offers for free, is that the workflow is fundamentally superior.
Interesting.
The feedback loop mechanism we just talked about is so deeply integrated into the developer's daily habits that switching back to Copilot just feels like stepping back in time.
Yeah, that staggering 25x revenue multiple isn't just a number to gawk at, though.
Yeah.
It represents the kind of generational wealth that makes or breaks empires.
Absolutely.
And if you want to understand just how fast that value materialized, we actually have to look at the FTX bankruptcy filings, which involves one of the most infamous names in modern finance, Sam Bankman-Fried.
Oh man. The FTX connection is undeniably one of the wildest subplots in this entire saga.
It really is. If you dig into the historical funding rounds back in 2022, before the total collapse of the crypto market, SBF's trading firm, Alameda Research, made an investment.
Right.
They put in what was, for them, a microscopic amount of money. Just $200,000 for a 5% stake in Cursor's pre-seed funding round.
A literal rounding error for Alameda at the time.
Completely. But fast forward to 2023, and FTX goes bankrupt in spectacular fashion. The bankruptcy estate steps in, and the lawyers are desperately trying to raise cash to pay back the millions of defrauded creditors.
Yeah, they're scrambling.
Exactly. So they look at the portfolio, find this highly illiquid 5% stake in a relatively unknown AI startup called Cursor, and they liquidate it, they sell it back to the founders at cost, they got their $200,000 back and walked away.
And here we are today.
Right. Today, under SpaceX's $60 billion valuation, that exact same 5% stake would be worth $3 billion.
It's just absurd.
That is a 15,000x return that just vanished into thin air.
What's fascinating here is understanding the mechanics of a bankruptcy estate. Their mandate isn't to be some visionary venture capitalist. Their fiduciary duties are risk mitigation and immediate liquidity.
Right, they just needed cash now.
Exactly. They were operating in the middle of a brutal crypto winter. Interest rates were rising, and no one knew if AI startups were going to survive, let alone hit $60 billion valuations. The estate couldn't hold an illiquid asset, so they took the guaranteed cash.
But the opportunity cost is just mind-blowing. The financial reporting notes that if you look at SBF's broader early-stage portfolio things like his massive stake in the AI company Anthropic or the crypto token Solana, the total hypothetical value that the estate missed out on by liquidating early is now estimated to exceed $114 billion.
And that specific number is sparking intense legal arguments right now in 2026.
Oh, definitely.
SBF's legal team is pointing to those missed billions and arguing in court that FTX was never truly insolvent. They're trying to claim that the estate's mismanagement and forced panic liquidations created a false impression of a total loss.
Which really makes you stop and wonder, does this massive valuation jump mean SBF was actually a visionary who saw the AI revolution coming?
Well,
Or did he just throw unlimited, illicitly obtained customer funds at literally every wall in Silicon Valley to see what stuck?
the consensus leans heavily toward the latter. When you have an effectively infinite pool of capital that isn't actually yours, you can afford to spray money across the entire frontier tech sector.
Yeah, that makes sense.
He bought enough lottery tickets that a few were mathematically bound to hit the jackpot. The deep irony, of course, is that the projects he funded, like Cursor and Anthropic, are the exact technologies powering the current global market boom while he sits in a federal prison.
Right. And that $60 billion valuation the FTX estate missed out on isn't just a hypothetical number, though it represents the staggering cost of doing business in modern AI.
It's extremely expensive.
To actually justify a $60 billion price tag, a startup like Cursor needs an amount of compute that almost no venture capitalist can afford. which explains why they had to look outside Silicon Valley toward a company that builds its own supercomputers.
Exactly. If we look at the logistics of this partnership, we have to ask what a software startup actually lacks that an aerospace company can provide.
And the answer is compute.
Yes, compute. Cursor has publicly admitted they are severely bottlenecked by compute. To train their next generation models like Composer 2 and whatever comes after it, they need an ungodly amount of processing power.
And if you're listening to this and wondering how a rocket company solves a software company's problem, you really have to look at Elon Musk's broader empire.
Right, because of XAI.
Exactly. SpaceX brings access to the Colossus supercomputer, which was built by Musk's other company, XAI. If you look at the hardware specs for Colossus, it boasts the computing equivalent of 1 million NVIDIA H100 GPUs.
Which fundamentally restructures Cursor's entire business model. Let's look at the unit economics for a second.
Okay.
Right now, every time a developer uses Cursor to write code, the system pings an API, and Cursor pays retail pricing to companies like Anthropic and OpenAI to process that request.
So they're bleeding cash with every line of code.
Exactly. A fraction of a cent blanks out to their direct competitors with every single keystroke. But by partnering with SpaceX and getting unfettered access to Colossus, Cursor can suddenly bypass that toll booth.
Wow.
They can train their own frontier models at a fraction of the cost. The unit economics flip from being a heavy operational burden to a massive competitive advantage.
And the structure of the deal reflects how intensely both sides want to lock this in. It's set up as a buyout option.
Right.
SpaceX has secured the right to buy Cursor outright for $60 billion later this year. But if SpaceX decides to back out of the acquisition, they are legally obligated to pay Cursor a $10 billion breakup fee for the collaborative work they do in the meantime.
It is a staggering safety net for Cursor. $10 billion just for exploring the partnership.
It's like renting an ultra-luxury penthouse apartment while deciding if you want to buy the entire skyscraper. $10 billion is an unbelievably expensive security deposit, but it shows how desperately SpaceX wants to get inside that building and start using the amenities.
It does. But this raises an important question, though.
Okay, what is it?
SpaceX already has an AI company. They formally acquired Elon Musk's XAI in February of 2026.
Right.
So why are they spending up to $60 billion on an outside company like Cursor when they already brought XAI in-house?
I was looking at exactly that, and it actually comes down to a massive data deficit at XAI.
Oh, the Twitter data.
Yeah. XAI's native models, the Grok family, are trained heavily on conversational data from the social media platform X, formerly Twitter.
Which is fantastic if you want to build a conversational chatbot that understands cultural trends, sarcasm, or breaking news. The real-time nature of social media data is unparalleled for that specific use case.
Right, but think about the implications of that for a second. XAI's Grok is digesting millions of sarcastic tweets, political arguments, and internet memes every single day.
Not exactly aerospace material.
Not at all. If you've asked it to write the critical flight software for a Falcon 9 rocket, it is pulling from a database optimized for engagement and internet arguments, not rigorous, flawless mathematical logic.
You don't want your orbital trajectory calculated by an AI trained on trending hashtags?
Exactly. You want it trained on highly structured logic. And Cursor has exactly what XAI lacks. They have a vast proprietary repository of structural data. They have recorded exactly how the most elite developers in the world actually debug, refactor, and build complex code architectures.
Furthermore, if you look at the corporate shifts, XAI has suffered a severe talent drain over the last year.
Oh, that's true.
Of the original 12 co-founders of XAI, only Elon Musk and 2 others remain.
Wow, just 3 left.
Yeah, the core engineering team has splintered. Cursor, on the other hand, brings an entirely fresh, highly motivated team of top-tier Silicon Valley engineering talent. The exact kind of people XAI desperately needs to rebuild its technical foundation.
But there is a massive geopolitical and technical twist in this data sharing plan.
Oh, here we go.
According to the tech analysis we reviewed, despite this $60 billion buyout option, Cursor is currently refusing to collaborate directly with XAI on coding models.
Refusing.
For the time being, they have explicitly said no to joint model development. Instead, Cursor is aggressively optimizing its own self-developed composer model. And here's the kicker. It is partially powered by the Chinese open-source AI model Kimi K2.5.
Wow.
They're doing this to maintain a totally independent technological path.
You're entirely right to point that out, and honestly, inside the industry, it looks like a massive contradiction.
It's more than a contradiction, it's a regulatory nightmare. Wait, you're telling me SpaceX, a premier United States defense contractor that launches classified spy satellites for the Pentagon, might spend $60 billion on a company that is essentially saying, thanks for the massive supercomputer access, but we're going to use a Chinese open source model instead of your proprietary American one?
Yeah, it's a tough pill to swallow.
How does that make any sense for SpaceX? I mean, why reward a company that won't fully integrate with your secure systems, let alone one relying on foreign open source architecture?
If you look at it strictly from a software engineering or national security standpoint, the friction seems insurmountable.
Totally.
But if you step back from the engineering side and look at the Wall Street side, the math suddenly changes. It's not just about the code, it is about the financial narrative. And that brings us to the ultimate reason for this deal, which goes far beyond artificial intelligence or geopolitical tech stacks. It's about the IPO.
The $1.75 trillion valuation we started the show with.
Exactly. SpaceX is currently seeking that $1.75 trillion valuation for their initial public offering. If they achieve it, they instantly become the 9th most valuable company in the world.
Right.
But SpaceX fundamentally is a heavily capital-intensive, money-losing aerospace business. Rockets are incredibly expensive to build, the fuel is expensive, the R&D is astronomical, and occasionally the hardware blows up.
And Wall Street hates hardware margins. You can't justify a nearly $2 trillion valuation on the economics of bending metal.
You absolutely cannot. To get that kind of tech sector multiple, you need an AI boost. You need the market to view you as a high-margin technology company. Software has near 100% gross margins once it's built. Cursor is already achieving positive gross margins.
So it's about blending the margins.
Yes. By bringing Cursor into the fold, SpaceX shifts its entire corporate narrative. They are no longer pitching Wall Street on a purely aerospace play. They are pitching aerospace and artificial intelligence. Cursor is the high-margin anchor that blends SpaceX's overall margins up, making the math work for the investment bankers underwriting the IPO.
And it's not just a story spun for Wall Street either, because the internal documents show they are actively building the infrastructure to make this a reality inside the company.
So the platform team?
Yes. We looked at a recent job listing for the SpaceX platform team. They are aggressively hiring software engineers, offering base salaries up to $175,000. And the job description is incredibly telling.
What does it say?
They aren't just hiring people to write standard code. The listing explicitly states they are hiring engineers to build internal developer platforms, secure AI gateways, and tools for automated code review.
They want to maximize the conversion of human engineering expertise into physical automation. It is a brilliant dual-pronged strategy. Externally, locking up Cursor prevents massive competitors like Google or Microsoft from acquiring them, while perfectly padding the IPO narrative.
Right.
Internally, SpaceX engineers are trying to solve some of the hardest physics and thermodynamics problems in human history with the Starlink and Starship programs. They need the absolute best AI in the world to write the software that runs that hardware, even if they have to navigate the complexities of how Cursor currently sources its models.
So what does this all mean? It means SpaceX has realized that in the modern era, it's no longer enough to just build the rockets. You have to own the foundational intelligence that designs the rockets in the first place.
The transition from vibe coding to agentic AI coding is creating these overnight behemoths. The fact that Cursor went from a $200,000 pre-seed investment to a $60 billion target in less than 4 years proves that in today's tech landscape, massive computing power is the ultimate currency.
It really is.
If you have the compute, you attract the generational talent and you capture the value.
And it proves that the traditional boundaries between industries are completely gone. The lines between a heavy manufacturing aerospace company, an enterprise software vendor, and a generative artificial intelligence lab have been officially erased.
And if you're listening to this, this matters to you directly.
Yes, absolutely.
Because the software you interact with every single day, from the secure banking app on your phone to the anti-lock braking system in your car, is about to be written autonomously. The very nature of how our digital infrastructure is created is being handed over to agentic systems like Cursor.
And that leaves us with a rather profound question to think about as we wrap up today. We started by imagining the incredibly high stakes of a $1.75 trillion IPO and a $60 billion bet on the future of code.
Massive numbers.
But let's take that autonomous future to its logical conclusion. If an autonomous AI agent, like the ones Cursor is building today, eventually writes the critical flight software for a SpaceX mission carrying human astronauts to Mars, and a software bug occurs mid-flight, who is legally and ethically responsible? Is it the astronaut who trusts the system? Is it the aerospace company that launched the rocket? Or is it the AI that wrote the code?